is put this little handy booklet in the chat box here. And this has basically the price patterns and kind of encapsulate the scientific basis behind the strategy. So download that PDF. I should have handed that to you yesterday, but hopefully you'll find that handy. So once again, welcome to the second day of the live trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. I basically did that today. My name again is Mark Shawson, the pattern trader. If it looks like my face is a little bit more fucked up than usual, I just came back from the dermatologist. And I don't know if you've ever had those freeze things where they spray that freeze on you. It's not a great feeling. And then it creates all these red blotches on my face. So maybe I should even shut the webinar, the video off, spare you guys. So once again, we talked yesterday about how I look at naked charts without any kind of indicators. So I don't look at, moving averages. I don't look at MACD. I don't look at volume. I don't look at news. I simply look at price action to evaluate setups, and evaluate risk reward. And to me, it's all about understanding your risk. So most people go into the market, they try and think with the thinking that, hey, I'm going to make all this money, or this market's going to go over here. To me, if I can size up my risk, if I can dial it down, if I can dial a trade down to a level where I can see a very, very small amount of risk for a very big outcome, those are my best trades. And so we'll talk a little bit about that today. I'll walk you through my trades. I'll walk you what I do, why I do it. We'll look at some live trades in the market. We'll open it up to questions. I also want to talk about risk management today. It's a very key component of trading. I'll give you a risk calculator. Just before I forget, I'm just going to put that note here to do that. So I'll do that in just a moment. So let me just kind of walk you through. So yesterday, I showed you how I had these JD call options. This is the stock JD. And instead of buying the stock, I bought the $71 call options when the stock was about $69 yesterday. Today, the stock closed at about $76 or $77. It was up about $7. It was up 10%. It was a monster move. And these call options, which I bought yesterday for about $1.10, went today as high as $5. So they went up 500% today. So, when I see setups, sometimes I'll buy the stock, sometimes I'll buy the options, but I look to make a monster amount of money in the market. And I made close to $200,000 today. And this is not a demo account. So this is as real as a heart attack. These are my live trades. I don't know any program that could simulate these trades anyways. And so I bought these Uber calls. These also exploded today. I got out of most of them today. And then I bought these puts yesterday on the close. And then the Dow actually opened lower. And these puts where I bought for about $1.30, I bounced out for about $1.90. I made about 50% of my money and got out really quickly. But it was really these JD call options that I had in this account. And then you can see I had it in another account where I had 400. So that represents 40,000 shares because each call option represents 100 shares. So you multiply 400 times 100. So I had a 40,000 share position and the stock was up $7 today. So you can see yesterday, these call options were at $1 and $1.20, and today they went over $5 or even $6. I got out a little bit early. I took a monster amount of profit and actually went higher. And then I, had these $44 call options in Uber, and they were 40 cents yesterday. They went over 90 cents today, and so I doubled my money there also. So these were my FX positions yesterday, pretty much the same. I got out of gold. You can see I had a stop loss in gold at 1805. Where I got in, it went to 1805. Now it's a lot higher. I got stopped out, and I just have these 3 pound New Zealand positions on now. So these are, what are these? Yeah, these are my current positions as of today, January 11th. So this is what I went home with. So I went long the Dow Jones. Yesterday I was short. Today I went long a little bit, later in the day. I bought it at about $1.70, closed at $1.90. I was up a little bit on that. I'm also long 7,500 shares of Alibaba. The ticker symbol is BABA in this account. We're, worth almost $1 million, in this position. I went long call options in Beyond Meat. I've been very bearish Beyond Meat, but I saw some bullish setups and, bought a call option on the bet that maybe it'll open higher tomorrow. These calls and puts are very leveraged, and you have to be prepared to risk all of your money. So, the money that I had in JD, I could have, should have been prepared to write off. I also have 200 remaining call options. I had many more. I had about 1,000 at one point. I've just been paring them back as Uber goes higher. And so that's kind of what I'm going into tomorrow, but principally long this Alibaba position, and I'll look at that in a moment. So you can see I also have 3,000 shares in this account. So all told, I have over 10,000 shares of Alibaba. I started kind of buying it toward the close. And then I have 3,000 shares of Uber. I have another 200 calls of Uber and another 40, so cumulatively there. But my big position today was in JD. So you can see I came in long yesterday, these JD calls. I blew them out today. I made almost $200,000. So here's yesterday, I bought 100 call options, the 71 call options at about $1.20. And I was filled actually at $1.25. That was my cost basis. So, I represented about a $12,500 investment that I had to be prepared to kiss off if it didn't work out. And yesterday it looked really bad. Stocks were getting pounded. JD went down, and I actually bought into that move lower. And I'll show you why I did that. And then today I bounced out between 375 and 4.25, and they went over $5 or even $6 today. I could have made more, but I made 40 grand profit in this account. And then I made $147,000 in this account. You can see I got 250 on at $1.21 and 150 calls at $1.15. And I blew them out between 360 and 375, which, was early, but, I was making a massive amount of money. I didn't want to give it back. And so pocketed about 200 grand today in a combination of a lot of different trades. And then my FX trades are sitting with a cumulative open profit. These positions I've just been sitting in the pound New Zealand, and I expect if we have a webinar a month from now, I'll still be in these positions. So this is, what I do. I look, certain trade setups, and I look to assess it. And I did it only based on price action. So let me kind of go back now. We talked about Uber yesterday. You can see Uber had slightly up move, nothing to write home about, but it's going in the right direction, right? So I said this is going to go higher, and you can see we went higher. We're about 1.5% higher. We had this key reversal yesterday, the double bottom, and I think Uber will incrementally go higher, but it was really in JD. Now, I really take pride in this because it's not really easy trade to see. There was a lot of kind of murky crap going on in JD, but this is how you kind of have to look for trades and separate the noise. And I pride myself that I'm pretty good at, what I like to do is find things on the turn, right? So when something turns from bearish to bullish or bullish to bearish, that's where you can make a lot of money very quickly, as I did today. When the market just looks like it's going one way, and then all of a sudden from nowhere it pivots. But it's really not from nowhere. There was a bunch of things that I was looking at. I was telling our members in my morning program yesterday that, JD looked like it was extremely bullish. And again, the way I assess it, so if you look at this, it looks like a bunch of noise, right? It's neither here nor there. It's like a flip of a coin as to where this is going to go. But to me, the patterns tell you where something is going to go. So in this particular time frame, you saw what's called an Adam and Eve double bottom. And, it's called an Adam because you have a single poke at that support level, and then here you have a multiple. But whatever you call it, this is a double bottom, and it looks just like the letter W, right? So once you see this bottom, you know that by and large, the trajectory is going to be higher. Now, this was a bit tricky, and sometimes, they'll revisit the breakout areas, and sometimes this went a lot lower than the breakout area. It actually took me quite by surprise. I thought once it was going here that, we were going to go. But this is why you got to, just be objective, see what the market's telling you. And then the market revisited this low and actually put on a very large even Adam double bottom. So now in this time frame, this is the eve where you got multiple, pokes at this $60 support area, and then you got the single, and then right at the single, you kind of have this inverted head and shoulders. So we looked at a head and shoulders yesterday, what looks like a man or woman's head and shoulders. This is just an upside down version of that. And so whereas this is a bearish pattern, once this is formed, this is likely to go that way. This is a bullish pattern. So once this is formed, it's likely to go that way. So again, once we understand the patterns, then patterns precede trajectory. So once I saw that pattern forming, then I kind of surmised that this thing was going to go higher. So in all of this muck yesterday, let me just kind of get rid of some of this stuff. So yesterday, if you remember, Monday, the stock indexes opened with a bang. The NASDAQ got pounded, the Dow got pounded, and you can see that, JD opened and then it started going lower. And it was right here when it started going lower. It was about 69 bucks. I bought the $71 call options right there. So I paid a dollar for these things. I paid a dollar. And so basically what this meant is that this had to go to $72 for me to break even. But you can see today it went a lot higher. And so this is kind of how you can make a lot of money by, kind of understanding price action and how the markets work. You don't get hooked out by, these things. And so this one is very tricky, right? So even for me, it would be very easy to say, okay, well, isn't this a head and shoulders? And it really is. So a head and shoulders is basically a bear pattern. And once it is, you can see that, the market went lower. But to my mind, this was really the driving pattern. So, we see markets and they throw us a lot of patterns. And then we got to determine which one is what I call a governing pattern, which one is going to govern the next major direction. And because of what I saw on the daily, and I'll also show you on the weekly, I surmise that this is the governing pattern. And so I think you're going to see that. I think these Chinese stocks, I said it this morning, it's kind of weird to say, it's like kind of stupid when you say it, but I said it this morning, and I said it 2 days ago. I think these Chinese stocks have bottomed for the year. I think you will not see this low this year. And so, if something's made a low, over time, it's going to do what? It's going to find a way to go higher. And so all of these Chinese stocks, I think, have put in a low. They got detonated, last year and this year, and it looks ugly, but it always looks ugly, it's always darkest before the dawn, right? And so, this is a very tricky thing because right here is this head and shoulders. But, I was kind of looking at this and saying, this also looks like a double bottom. And to me, this is going to be the governing and driving pattern. And that's exactly, I bet, a lot of money. So I put 60 grand in these call options 2 days ago when the market looked terrible. And if I was wrong, I would have had to kiss off 60 grand. If I bought these call options here, and if the market kept going lower, I would have been toast. And so, it's very nice to make 200 grand, but, when you make these bets, you've got to be prepared to, lose everything that you put in the middle. It's like a poker player. So anyhow, this is an asymmetric. So people say, well, this low is lower than that. But I think if we, look back, a while from now, we can all agree that this looks like a W price pattern, a double bottom price pattern. So sometimes it's perfectly symmetrical as here. Sometimes it's a little bit asymmetrical. But whatever it is, to me, patterns precede trajectory. So once I understand the pattern, then I can anticipate the trajectory. And this one was a little bit harder, and I really pride myself on, this trade today, because it wasn't easy to see. And sometimes your eyes a little tricky when it's, going all over the place. You don't know what the hell's going on. But to me, this thing has bottomed. And if we peel back and look at the weekly time frame, and this is what I would encourage you to do. So instead of looking at 15-minute charts or 30-minute or hourly charts, I look at long-term charts. And you can't you can't find this history on a 15-minute chart. So there's no way, if you look at these charts, that you could have the confidence to do the trade that I did. But what I was looking at on the daily and the weekly was, you can see the double bottom in this time frame. So just like we saw on the daily, so you see it on the weekly. And then we just came back to kiss that low. So now we really have a double bottom. And now it looks like that will be the trajectory. And so, people say, well, is it too late to get in? I think it's just started. Obviously, we had a very robust today. It went up 10% in a day. I kind of wish I didn't get out of all of my positions because I think there's going to be, more left on the table. But I just danced back into Baba, which is also a Chinese company, and I think that'll likely do well. So, this is a bit of a mess in here, but I'm focusing on the price action here. And what I look at is a combination of the patterns. So you can see that this is a double bottom, a large bottom, if you will. But I also look at the price action. And what you'll notice about what I mean by the price action is when it made a new low, it closed right on the high. When it made a new low, even though it was red, it closed right on the high of the week. So what that told me is that every time they drove this thing to all-time new lows, by the end of the week, the buyers were in control. So when I see a combination of both the pattern and the price action, so when something closes on the high, it actually points in the direction it wants to go. And you can see that, last week we had this. So you can see that it closed right on the high of the week here. And this is why I look at bar charts. People say, well, why don't you look at, most people look at candlesticks, what have you. I focus on how something closes relative to the low. So you can see the low is all the way down here, and then it closed right on the high of the week. And to me, these reversals, now you can't just trade these reversals in a vacuum, but when you see it in combination with the pattern and these key areas where it grabs support, these things actually point in the direction it wants to go. Pound New Zealand 5 years ago had 1,000 pip range on a weekly bar 5 years ago in 2016. And to my mind, it was pointing much higher. And that's why we're at 201 today. This was at 165 in Pound New Zealand 5 years ago. So, these reversals, they actually point in the direction the market wants to go. You can see there was a reversal here, made a new low, close at the high, and then put you into that. Now, all reversals are not created equal. Just because you see a reversal doesn't mean you can, just trade that automatically. But in this case, when you have a combination where you have the pattern, the double bottom, and the reversals, that's, when you can kind of go to town. And that's what I did. And, that's, so there's what happens. And I, think that we will keep going higher. So, same thing with Alibaba. I put out a trade on our elite email. You can see that it's, here on January 4th, I told our members in our elite program, and, our teams will, if you want to get it, involved in this program, we'll let you know how. And actually, this should be 130. to 22. So I told our members as early as January 4th to get long Alibaba at 120.97, Heron at 121 today, closed at 132. And I'm up, $11 in that stock, and actually suggest that they add to their trade. So, most people, if you have $11, you'd be, most people would be, happy to get that in the first place and be looking to, get out a lot sooner than that. I'm actually holding on to that trade and actually looking to add to that. So this is the stock of Alibaba. It's another Chinese stock, just like JD.com. And what we see with Alibaba is, a stock that's gone straight down, over the last year or so. You don't even see the whole thing here, but it's, dropped from 280 bucks to 110. So, people say, well, you got to go with the trend. The trend is your friend. That is true. But just like everything else, trends do end. And when they end with the pattern that tells you that it's going to turn. And I think that's, what we're seeing in BABA right now, where we made a low, we made another low. And so if you draw it out, it looks just like that W that we saw in JD. And you can see that we're dancing or pivoting around the neckline. So the neckline is simply a line that's drawn through the pattern. And when we go through this line, it basically confirms what we're looking at. Sometimes you see, these double bottoms. So, the market could trick you out. So here was a bottom. It looked like a bottom. It actually broke through the neckline, but you can see the trend was still, going lower. So you kind of have to know when to hold them, when to fold them, when it's a bottom and when it's not. It's, too lengthy for me to get into the nuance of why that really wasn't a bottom to me and why this is. But I think that we are at a major low. And so you can see now we've had kind of a 3-day, what I call inside day bar, where you can see the ranges from high to low of the last 3 days basically sit one on top of the other. And to me, this is just a coil. It's a building, it's a storing of energy. So it's kind of like, when you put your hand on top of a beach ball and you push it underwater, you push it lower, 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 and then you take your hand off, what happens? It just explodes to the upside because it's got all that compression, that energy. And so I'm surmising that it's going to break to the upside because of the preceding bullish price pattern. So you can see today I loaded up, I've got over 10,000 shares. That's a $1.3 million investment, and so I don't take it lightly. I think I put my money where my mouth is, and I think this is what you're going to see. And what I'm also seeing in BABA that, kind of tells me that you're going to have a massive opportunity here is that you have this bear trap. So you can see this is an area where, it was a significant area we came to, we bounced, and then, people said, okay, if it's going to go through here. So you had all this selling, all these people with these stop orders here and the selling. But the thing is, if this thing starts coming above here, now this represents a bear trap. So everybody who sold here didn't get out is going to get trapped. And so when these traps are sprung, they can just leap out of here, with a massive energy. And, frankly, I wanted to buy the options today, but they were very expensive. So when I buy an option, I'm looking to make 3 to 1 on my money. And since, we're getting closer and closer to Friday, I bought the stock, which obviously requires me to put up a lot more money. It's a more conservative way to go. But either way, whatever you do, I think that there's just an enormous opportunity. And, I think that this just hasn't even started yet. And I think we put in a bottom for the year. It's a big call. So you can see that you've got this long downtrend line, and we're not even close to it. So this is not even going to start till it hits 150. So I think there's just a lot on the table for BABA. If you look at the ETF for all of these Chinese stocks, BABA, Baidu, on and on. This is a more conservative way if you want to put this in a long-term account or what have you. I think this is the KWEB, KWEB, and I think you're looking at a very subtle bottom here. and you basically closed above the neckline today. So I think you're just basically confirming it. So this is a huge downtrend. And I think over the course of this year, you're going to see this thing turn around. So that is, the more conservative way, KWEB. It's an ETF that comprises all these stocks, and conservative way just to get in there. But I think, again, you get here. This is your risk. This is your risk, and that's your reward. So you've got a $3 risk to make 30 bucks. That's how I see this trade. 10 to 1. So that's what I look for in my trading, and that's how you make a fortune in the markets, by finding these little pockets where the risk has been established. So where I see this as a bottom, with the word bottom in it, that to me says that that's my risk. If it goes below 34 bucks, all bets are off. I'm wrong. I'm out. I'm gone. But so what? I risked $3 to test this thing out, and I think I'm right. So we'll see how that goes. So with that said, I wanted to talk a little bit about risk management, because it's fine and well to look at these trades, but what most people are doing, certainly in the FX market, is that they're risking too much on an individual bet. So if you risk 1% or 2% or 3%, if you're risking 3% a trade and you have, a bad string where you lose 5 or 10 trades, now you're down 30, 50% very quickly. And this is what most people are doing, is that, even though they think, oh, I'm being a good boy, I'm only taking a 15 pip risk. That's too close, because you're just going to get
Hey everyone, looks like we lost Mark for a couple of minutes. Just hang tight for a couple of minutes and he'll be right back. All right, so as we wait for Mark to get back on, just seeing a couple of interesting comments. Dale says, "Is this the beginning of Zoom stocks plummeting?" that's for that's funny. Um, Dean says, "Windows 11 gremlins at work." Yup, definitely. Hang tight, guys.
Dwight, can you hear me?
Hey, Mark. Yep, we're here, still connected.
Okay. Yeah, I live in South Florida, and we have storms, and then I get cut out. So I apologize for that. Hopefully, didn't lose too many of you here.
Nope,
Um,
very faithful students here, hanging in there.
you guys are glutton for punishment, I tell you. Um, so what I wanted to talk to was about position sizing. So what you have here is a position size calculator. It's exactly what it sounds like. This tells you exactly how big a position is, a size you should do for a given amount of risk. Now, this is principally for the FX market. I'll show you how to kind of do that calculation for stock trades, but it's very important. So risk management is really the key to your long-term survival. The whole key to being a trader is to be around for another trade tomorrow. If you blow yourself out, then you're out of the game, and you can't come back. And so the professionals and the guys who know what they're doing size their trades properly. And then I'm also going to show you how you can take advantage of these big trades. Even if you've got a 300 pip stop, it doesn't matter. And so this is, as it sounds, a position size calculator. I put the link in the thing. And so you can use this in any denomination, major currency around the world. For the sake of this exercise, I'm going to assume a US dollar account and an account size of, let's say $5,000. But you can put, whatever you want in this field. Put whatever, your account size is, the balance, what have you. And this is the important box right here, is the ratio. People think that the risk is, in pips, right? So if you, risk 15 pips, you're being disciplined. But if the market is too, the pound New Zealand dollar, goes up and down 300 pips a day, there's no way you can stay in that trade. And so this is where you establish your risk, and you say, okay, how much do I want to risk on this trade of my account? And typically I would say, for your average trade, you should risk 0.5%. So that way, if I send you 10 bad trades in a row, you've lost 5% and you live to fight another day. And then the 11th trade, I can make 12%. And so you've had, 11 bad trades and you're up 7%. And that's how to make money. It's not the amount of your wins. So, it doesn't matter, if I've only got a 37% win rate, if I make 200 grand on JD today, and then, I lose a bunch of money on, some indiscriminate trades in the next week or so. It's all about the quality of your wins versus the quality of your losses. So, let's say, for instance, in the pound New Zealand dollar, you just come down here, scroll down, find your pair, and then you put your stop loss. And, typically I like to keep my stop losses wide in the pound New Zealand dollar. Let's say it's 187 pips. So now this is where it's a bit tricky. They've really changed it. They've made it much more complicated. So you can see one lot equals 100,000 units. So that's like a normal lot. So if you're going to do a mini lot, then it's 0.1. And then you just hit the calculate button. And this just tells you, and I don't even know if I did that right. They've made this really terrible. This should be a great position size calculator. So, one lot equals 100. So 0.1 is 10,000 units. And so basically, if you put, if you had 2 mini lots, you could, risk 0.5% and you'd only lose 25 bucks on this trade, even with the 187 pips. So I don't even know if that looks right. Let me just change this parameter to, yeah. Okay. So this tells you, if your stop loss 154 pips, you can put 0.24 mini lots. And even if you get whacked out on a 150 pip trade, it sounds like a lot, but all you do is you lose $25 of your $5,000 and you live to fight another day. So the whole thing is, if you keep your position sizes small, and it's the tortoise that wins the race, right? Everybody's trying to, I think, go too quickly, and then you're blowing yourself out. And if you're like all of a sudden in a 30% drawdown, now you got to make 60% just to get back to break even. So it's all about, risk reward, finding the right trades and doing the calculations properly. So in terms of stocks, if you want to kind of figure out, okay, I want to buy Alibaba. I have $5,000 account, and Alibaba is trading at call it 125 or 130 bucks. And you want to take a 1% risk on your account. So 1% of 5,000 is 50 bucks, right? Is that right? So basically, now you'd say, okay, what is my risk? If I buy, Alibaba at 130, let's say, call it your risk is, down to 125 or $5. So $5 is your risk. And you're looking to risk a total of $50. So then you can buy 10 shares. So if you buy 10 shares of Alibaba at 130, goes to 125, you get stopped out, you lose $5, you're going to lose 50 bucks or 1% of your 5,000. So if that makes sense to you guys, that's basically how to kind of, and you can buy fractional shares. There are brokers now that if you want to buy Tesla, you can buy whatever, fractional shares. So there are ways for you to get in these things and still keep your risk low. What people tend to do is find some, exotic thing and then just, trade many times a day, trying to extract it and then think, they're just keeping their risk small. But actually, you can die a death of 1,000 paper cuts. If you get stopped out all the time for 7 pips, eventually that adds up to, a lot. So Casey says, isn't this rule extremely limiting for options trading? Well, with options, you have to risk everything you put in. So if you decide, okay, I want to risk, 50 bucks on, an option trade, you have to be willing to risk the whole thing. And if you do, you're going to lose 1%. So you can come here and say, okay, where's Baba? Baba's very expensive. That's why I didn't buy the options today. Where's Baba? Here. So close at 132.5. So the out of the money options, and they expire on Friday, right? I mean, you can go further out. The further out you go, the more expensive it gets. And so I typically only buy for that Friday. So it's got to work, and it's got to work right now. When I bought those JD calls yesterday, when it was 69, I bought the expiration for Friday. Turns out it went up huge today. So you can see so close it, call it 132. So the at the money things are $3. So that means your break even is 135. So typically when I buy an option, in order for me to buy it, I have to see that I'm going to make 3 times my money, 300%, because, you're going to lose a lot, where you're going to lose 50% or 100%. And I frequently do. So in order to take those hits, you need to have a day like today in JD where I make 500%, where I make 5 to 1 on my money. And so you can see this is why it's very expensive. Well, that's at the 132. If you go to 135, it's, still 168. This has got to close at 136.68 just for you to break even. And now for you to make, 3 times that, this thing needs to go to about 141 by Friday. Now, it could do that. The way this is going, it could very well do that. And so, sometimes you got to make that calculation. But what I'm saying is that, so each option, so this is $2.45, but you got to multiply it by 100. So this is $245 for one option. So if you want to spend 50 bucks, you can't do this. So sometimes, I'll find options for, I bought some Uber options for like 20 cents, for $20, and they went to $90 today. So there are certain times where, there are certain instruments that are less volatile, like Uber, where, the lower volatility will be the lower option premium. But you're right. If you don't have the money, you really shouldn't be playing with options. You should build your account, buy the stock, build your account, and then, when you've got a bit more, you can get more aggressive. So that's basically how to use this calculator. So I can, basically talk about anything you want. Talked about pound New Zealand yesterday. It's not moving much. It's basically, I'm still long for all the reasons we talked about. You can see this thing's going straight up. It was up slightly today. So if we look at just this daily chart, I looked at the long-term weekly chart and showed you why I was buying it on the weekly. But you can see this looks a lot like JD, where you kind of have an inverted head and shoulders here, a very small one where it started. And then if you look very wide out, this whole thing looks like an upside down inverted head and shoulders. And that is a very bullish price pattern. So once it crossed the neckline here, this was the green light on this trade right there. And now you can see it's come to the second barrier, and it's just dancing around this resistance. Typically, when you get to a major resistance, you can consolidate. You can spend some time here. And the more energy, then it just builds for the next move. And so, I'm long pound New Zealand. I'll wait for a consolidation, and I'll keep adding to this trade because I think this thing's just getting started. Joseph says, please tell us about your program. So I'm not here to sell you anything. After the 4 days, if you're interested in what we do, I'm sure our team will send you a link. Maybe I'll bring one of our team members on, Zach, to talk to you about the elite program on Thursday. But, I'm not really here to solicit, so I don't want to make it seem that way. But I appreciate you asking, Joseph. If you really want, send an email to our support team. I'll just put that in the put the link here. So support at thepatterntrader.com. Duncan says, teaching to trade, read the patterns to make you understand. So yeah, Duncan's one of our long-term members. Thank you for that. Simon says, do you use cup and handle? So I use everything. To me, this is what I look at: patterns, price action and patterns. And so all you see here is time and price. There's no volume, moving averages, any kind of, complicated things, where you see all these things and you're looking for some magic crossover. I can stand back and look at this picture. And then the idea is to make a risk reward calculation. So if I'm getting in here on this breakout, what's my risk? And I calculated that my risk was very low, was to that low, and my reward was very high. So, that's my risk. And, I think my reward is several magnitudes of that. So it's all about finding these little areas like JD, like whatever, where, you find these areas where the risk reward, becomes acceptable. Now, today I did what's called a counter trend trade. Let's see if it works out tomorrow. It was really a gamble. So I've been very, very bearish on BYND, Beyond Meat. And, I kind of beat my, so I'll do what's called a counter trend trade, where the main trend is lower, but there are times where there's a setup, like there was here. And actually it was on this counter trend trade that I made the most amount that I did the whole of last year. I made 7 figures on that one trade in 3 days, where I got in here and got out there. I bought these options for $1.55 and they went to $23 in 4 days. And that was one of my most successful trades, going against the primary trade. So, I will do what I call these counter trend trades, where it's counter to the main thing. And so right now you've kind of got this setup where I think you can get one of these little counter trend trades. So you can see here was the head and shoulders. This was the main thing that dictated that this thing was going to go a lot lower. And I made a ton of dough shorting this thing. But you can see that, in this thing, we're kind of getting jammed up here. It's got a bit of, and, I'm thinking maybe I'll get, a little bit of a post. So I bought the options right on the close. I bought the calls right as it closed. And if it opens higher, I'm just going to, get out and, so sometimes I just play around. But what I'm looking at is you can see that we broke this low and created this kind of bit of this bear trap. So, if you, chase this low, now all of a sudden, it could go the other way and it could be a bit of a trap, a squeeze play. And so, I think the market's in that frame where it looks like these markets are now turning higher and all these unloved, beaten down things could, every dog gets its day. And I just bought some calls, on the close. I think I showed you where I bought some calls right here. I was trying to buy 200 and then the price went higher and they just gave me 175 at $1.20. I think it actually closed at $1.30, but you can see I spent $21,000 and, that might just turn to dust by tomorrow. So we'll see what happens. But I'm just counting on a quick move out of here and, we'll see what happens. It's just, sometimes I like to have a bit of fun and it's not the greatest trade in the world, but who knows? So Peter says, Beyond Meat is dog meat. Yes, long-term, this thing's going back to 30, 40 bucks. I said it even at 200 and I believe that, but sometimes, the trades don't go straight down. There are whole times where, there's phases where they go a little higher and I'm just trying to catch a pop out of here. Believe me, I'm not going to overstay my welcome. I'll make a few bob and I'm gone. So he says, what are your five favorite patterns? Well, I mean, the vanilla patterns are, the ones that I've basically shown you where you have the head and shoulders. In this case, the right shoulder was lower than the left. And so it creates this downsloping neckline, right? Instead of a horizontal. And so what we know about is because the right shoulder sits below the left. And so it creates this downsloping. And so what this tells me is that not only is this bearish, but it's going to go down very, very quickly. And so, I saw a head and shoulder there. This was a rounding bottom here. This is kind of, maybe an inverted head and shoulders for a small move, but, and then you see this, intermediate double bottom, double top. So there's patterns all over the place. And so, I gave you that, strategy workbook. I'll put it back in the thing if you didn't get it. And this has my my favorite patterns in there. Do you have a screener for stocks? Yes, I do. I use, several things to look at stocks. This is a good one. It's called FinViz. And you can just spend all day on this thing and you can go here, go to the screener, say, look, I want to look at, NASDAQ stocks. I want to look at technology stocks. I want to look at a market cap of a large thing. And then it just gives you all of these things. And you can actually go down here, check out the charts and just stop on something that, stands out. So frequently I'll just go down here and go, whoa, that looks pretty good. And so, I know nothing about these companies. So just from doing this kind of analysis, I can pick out, trades that, may look fertile. Datadog, that's, had a multiple top. It's going to have a dead cat bounce and then you can short into that, the same with all of this stuff. So that's, and then I look at earnings and I look at a bunch of things. So somebody wanted to look at the 10-year note. So the 10-year is, I don't know. I would not trade off that. Everybody talks about the 10-year, but you can't trade off that. I would, to me, you really have to be looking at the instrument. I was talking about that today in my morning session, where yesterday the markets were crashing. And even today, the Dow opened and started crashing. So you can see yesterday, this is what it looked like. The market was actually plummeting. Everyone's talking about the 10-year going higher. So yesterday, the market was down there. It's come plummeting. Everybody's talking about rates going up. The Fed is tightening, all this stuff. And I'm buying Uber and I'm buying JD right when the market is down here. So you got to keep an eye on whatever you're trading. That has its own risk reward parameters. If you're trading some news thing or what the Fed's doing or what the T-note went to today, T-note's over 180. So, that's a catalyst for tech stocks crashing. Meantime, I'm buying Uber and I'm buying JD and I'm making a lot of money. So you really have to, focus on the trade you're looking at. Roland says, what are your trade rules for getting out once you've entered? So typically, the way trades end is the way they started. So if they start with a pattern, then they've got to end with a pattern, or they'll end with some kind of if I start seeing some things in the way where there's just an intermediate setup where it's going to go the other way before it goes back up, I'll get out and then reassess. And so every trade is different, right? Every trade, I have a different objective. So now my view of these Chinese stocks is that they have bottomed. They've been beaten up and they've bottomed. So if they've bottomed, even though JD's up huge today, look, I got out because I have these short-term call options that expire on Friday and I was making 500%. So even if the stock goes down $2 tomorrow, it's nothing, but those options will get, hammered. And so options are a whole different animal. My motivations for getting on those options are very different than holding this stock. And so, you can get in, and so my horizon now for getting in JD would be 3 months from now. I'd be looking to get out. So unless it gives me some kind of, thing where, you've got it, so that's a good question, because my expectations, and this is where you've got to stay completely objective. I thought, okay, now we've reached the bottom. We retested it. We came here and now we've broken out. And I thought this was going to be followed by that. I really did. And so this is where you got to say, okay, the market's, makes a new high and then it stops going higher. You can see all these things. It's like pushing on a string. It's like Beyond Meat. I was expecting Beyond Meat to go lower in May. It went down to $90, but every day it was like hammering on that $90, couldn't get through. Then it started turning higher. Then it gets to 105 and I go, whoa, wait a minute. This doesn't look right. So it's the same thing here where my expectations are that it should go higher, but if it starts going lower, I'm not going to overstay that welcome. And so, and when something turns, I'll actually go the other way and that's a whole other thing. So you just have to watch. So, it was my expectation that I was long here and I thought this thing was going to go higher. And then every day it's kind of making lower highs. It's creating this, lower. And then all of a sudden it breaks out and you go, wait a minute, this is not doing what it's supposed to. And so I will look for areas to get out. And it doesn't mean that that's not ultimately going to get taken out. So what I saw here, I still think is going to play out. It just sometimes the market does things in its own timing. And so, every trade has its own parameters and it gives you a look. And then, sometimes I'll just see a trade where I'm long and, I see something like this where it makes a new high, closes on the low. And I'll just say, okay, I'm out. I'm going to take profits. I'll see what happens. Comes back down. And so, you just got to get in the cadence with the trade. But it all starts with a shape, a pattern that tells me, okay, this is the gestalt for doing something. So Vincent says, so where exactly are you getting in the trade? So it really depends. I mean, if you haven't gotten in this trade now, I get in I try and get in right on the turn, and I did, when this thing's just turning from one thing to another. And, this was extremely fortunate and early. And, what I saw was that you also had this kind of downtrend line. And so you started breaking above that 2 days ago. You kind of had this funky line that, look at that, all these lows connected to that line, and then it just stopped right there. And I kind of said at that time, I said, that's the low in my mind. I kind of said, so I've been just doing this a long time. And, I kind of, try and see where the opportunities are, but also where the potholes are, where they create these traps, where they make you think it's one thing where it's crashing, but actually it's going to go the other way. And so it's hard to explain everything. I've just been doing this a long time, and I can kind of get a sense. And then when the market confirms it, just because, you don't maybe have that same thing, once the market kind of breaks out, now the market's confirmed it. Now, typically when you break out, you do get some kind of retest of this thing, and then, it's usually good to go. So I would imagine, we might get up here, and then it's followed by some kind of down thing, and then what have you. But who knows? This thing is so unloved and beaten up, and the perception is so bad that this thing could just do one of these. And I would not be surprised. And that's why I kind of, I made my money there. Then I got into BABA today. BABA is at a kind of a more, mature place. And, but the thing is, so once it kind of starts going and does its thing and, comes back down, then, you look for, a day where, it's, it goes through, backing and filling and what have you. And then, you get a day where you get your key reversal, where you get a flush out, makes a low, closes on the high. And so basically, so now that you should be faced long. So once I understand where I should be in a trade, long, short, based on a trend or a pattern, then I know when I see a certain day up here that, I can assess the risk reward. This was like Uber yesterday. I said yesterday, Uber made a new low, close on the high. You just buy it here and then go with the thing. So this is exactly what happened in Uber. This is exactly what I talked about yesterday. I actually sent out the trade to our elite members, where once I see, the pattern that tells me which way I need to be faced. So this tells me that this is going higher, despite the fact that it goes lower here and it goes lower there. That to me is just a misdirect. This is the distraction of the market. I would say the market's like a magician. So a magician never just comes on stage, and takes the rabbit out of the hat. He's always kind of distracting you with the right hand while he's taking the rabbit out with the left. And that's what the market does. So basically right here, it tells you what it wants to do. It's bottomed. So if a market's bottomed, it's just going to go higher, but the market just doesn't go like that. It does all kinds of things to flush you out the weekends before it gets going. And so you can wait through all of this crap and wait for a day where it gives you a signal, where it's unambiguous. This made a new low, close at the high, decent range, a big range thing. And I said last night, just put your buy stop here at 42.90, put your stop loss there, and then let this thing do what it's going to go. It's going to be up, down, sideways, and you don't have to worry about it. Your stop's there, you got in there, and just let it go now. So, I have a saying, the market puts you in and the market takes you out. So you put your entry there. You can see it went slightly lower this morning. I was on my early morning boiler room when the market opened lower, and I said, you guys should be buying Uber into this lower opening. It was trading around 41.80 or something like that. And then all of a sudden it went to 44. So sometimes I will use the morning, session where in the pre-market, you may see, the market trading down there. You may see a price that you'd never see in the regular session. Actually, that was the case in Beyond Meat in May. I was buying that stock in the pre-market at a price that I never saw. I bought it at 120. It opened at 123 in the regular session. So you can use these pre-market openings to arbitrage if so if I'm looking to, if I think that this is a buy, if it opens lower, I'm going to buy into that lower opening because now my risk is less. Instead of buying it there and my risk being this, now my risk is that. And so, but it all starts with an assessment, is this a buy or a sell? And this tells me this is a buy. That very simple, stupid thing that you can find on any website. But, the reality of getting in these things is very different. So Vincent says, where exactly are you getting it? So it depends. So now, if the trade's taken off and you're seeing this, up here, then you just wait for a collection and wait for a day where it kind of gives you, a signal. It's got an inside bar, a key reversal, another thing. And now you got this thing. Now you put your buy stop here, your sell stop there, and now you take it up here again. And so the idea is to assess where something is going and then, use all the tools in the toolbox to join the trade. Matthew says, how do you know the end of the trend is finally formed? Well, it will tell you, right? So things end the way they start. So, you'll see something where you'll see a head and shoulders, or you'll see a double top, or you'll see some pattern that tells you that it's going to go the other way. So trends end the way they start, with some kind of pattern. And so this is why I'm kind of troubled about the indexes right now. They're kind of ambiguous, right? So there's all kinds of, so first off, in the indexes, the trend is still higher, right? So this is still much of an uptrend. And every time, you think this is ending, so the trend is still higher. There's another bear trap this week where, it broke this thing. Anybody who chased that now is going to get smoked. So, now it's a little bit tricky. I don't know if this is, just a short covering rally or, we're going to go to new highs. It could do anything. So, so the indexes are one thing, but I know what Bob is going to do, or I think I do. And, I know what my risk reward parameters on Bob are. So I don't know what the indexes are going to do tomorrow. It could be all over the place. Yesterday it went down and up. Today it went down and up. I mean, it's just all over. It's just huge volatility in here. But that's why I look for plays like Uber, where I can understand areas that the pockets of risk are very, very small and the upsides really, really. And so this is something where, here was a head and shoulders pattern, right? So that's what I say. The market throws you patterns. And then, so what I do is I draw my boundary or my structure around prices. So there's a head and shoulders. So now my expectation is if that's a bear pattern, that's what should ensue. But if, prices start doing this, then, this is a busted pattern. The implications of that are busted. So whereas this tells you that it's a bear pattern, right here or here, it starts busting above the shoulder. Now it starts saying that whatever this was telling you is wrong. And so, I will just automatically go the other way. So it's a bit tricky. It's not like a textbook. Textbook, you see the patterns and then you see everything working out perfectly. The market throws you a bunch of patterns and then you got to, same thing here. You had a beautiful head and shoulders, broke the neckline, and then trapped you. Put that double bottom there and went the other way. Same thing here, broke, put a double bottom and went the other way. And so this may be the same thing where, it trapped you here and now you could get smoked. So, it's a bit tricky. So you can see that the NASDAQ has been adhering to this long-term uptrend line. And every time it bounces on this thing, and I said this week, I said, watch for this area and it's likely going to bounce there. So on my Sunday video, I said, close there. I said, it's going to go here and it's likely going to bounce there. And that's exactly what it did. You can see every time, made a new low, close on the high, 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 there, and there. And every time it was followed by new highs. So, and it's just amazing how, these lines intersect and the market does the same thing. So this is why I believe in price action as a religion. I mean, you can't, ignore this. Every time it touches here, it means something. So, I look for all of these patterns and, lines and intersects and what have you. And that's what I try and, digest in my communications to you guys and my programs. Terry says, so you're much more likely to trade individual stocks compared to trading indexes. So most of last year, that was the case. I was shorting, the crap out of, Zoom and Peloton and QuantumScape and Beyond Meat. And those things crashed 70% while the indexes were going higher. And since February, I was saying, look, there's kind of a bifurcation. There's two markets going. The indexes are going to new high because, Apple and Microsoft are driving these things. Apple is a $3 trillion company and Beyond Meat is whatever, 200 billion, whatever. And so, these big companies are driving this, this way, but there was a whole bunch of stuff, that I was shorting. So I was really, focusing on the individual stocks. Now I think, there's, some action in the indexes. They're a little bit difficult to, handicap here. It's a bit of a gamble, as to what's going on. But, you can see how these things make new lows and close on the high and the same thing. So we have to see how this closes, not Friday. But of all of them, the S&P kind of looks like the strongest. That's why I didn't think this sell-off was real. This thing just looks too strong. It looks like we're going to go and make new highs here. So I really didn't believe in this sell-off. So I was buying into these JDs and buying into the indexes and buying call options and all this stuff, even though the markets were crashing this week. So you can see we're traveling in this thing, but the same as the NASDAQ, every time this thing bounces off here, we go and make a new high. So, somebody asked, well, how do you know when it ends? And so that was my trouble with the S&P. This does not look, even though, and this is what people say, well, it can't go any higher, or because it's gone so high, it's got to stop somewhere. No, it doesn't. Markets don't die of old age. And so I didn't see a pattern here. I don't, you could say, well, this is a double top, but then the thing is you have these key reversals here. So this didn't tell me that there was a sell formation. So of all the indexes, the S&P looks more stable and more bullish and more likely to continue higher. So that's why I just went long the Dow on the close today. I just surmised that these things are still going to go higher. Says, can we short the IWM, which is the small cap? So that's kind of a lagging, index. But I suspect it's, just like these where you're catching a bid, along this thing. So I'm not sure, this of all the indexes looks the weakest relatively. So you can see we broke out here. Right at this top, I said, this looks like a bull trap when it starts sneaking back here. And I said, this is going to come the other way. And that's what it did. So now we're kind of, trading on this lower support line here. And, I don't know, man, it does feel like, it's going to leak. So this is the weakest of them all. But again, you have to wait for this thing to tell you, that it's ready to go again. So wait for one of those to get in sync with it if it's going to do that. So this is just a mess. You can see that, this is just a pick'em type of market. And I don't like these kind of markets that go sideways. I like markets that go this way or that way. I want to take a piece of the middle out of a move. That's what I'm looking for. These markets I tend to avoid. US 30 is the Dow, James. Gold. So I'm going to look at gold and then we'll end there. So gold is really at a major inflection point. There's a major opportunity on the table in gold. And, you know, when I'm a little bit ambivalent as I am, I could make the case both ways. I kind of just give the market a little bit more time to, you know, tell me which way. I took a poke at shorting it. I got made some money, then I put my stop loss, I broke even, and, you know, so gold has been trading for a long time within this ascending, broadening price pattern. Now, you know, this is typically a bear thing, but, you know, the NASDAQ did the same thing in March of 2019, or the heart of the pandemic. This is what happened. The NASDAQ grabbed a foothold at the low of an ascending, broadening, and went and made an all-time new high. So what I tend to do is I put these structures, these boundaries, and again, you can see how closely, you know, these lows, you know, intersect. So now this is either the lower end of a support thing that's going to go this way, or if we cut through that way. So either way, we're at a very key inflection point in gold. And there's going to be a, you know, a huge opportunity. Kind of looks like it wants to go higher, but, you know, I am still a little bit reticent to handicap that. So you can see, you know, in addition to the ascending, broadening, we've got this kind of symmetrical triangle. And, you know, we're getting toward the business end of this thing. You know, this is a weekly chart where these are weekly bars. So it could take, you know, still several more weeks banging in this range, you know, to give us an indication. But, you know, I would keep an eye on if it starts breaking out there or breaking out there. You know, either one of these intersects is likely to, you know, give us a huge move. There's going to be a huge move that follows. Now, you know, it's also possible that you get a, you know, fake out here where you get slightly above here, then it hooks you in. So I still kind of feel like we're going to go lower, although I also have to look at all of these reversals. Look at that double bottom right there. And then you notice the key, the price, you know, the price action along all of these lows. Makes a new low, close on the high, makes a new low, close on the high, makes a new low, close on the high, et cetera, et cetera. And all these bars kind of point in the direction that gold actually wants to go. So it's a bit of a tug of war in here. And, you know, I could make the case either way, but, you know, we'll see very quickly. You know, I'll probably know by next week or something like that, because, you know, we've got this little coil here. I expected it to turn down here, and it's actually holding. So, you know, if we start kind of breaking above here, you know, I'll start, you know, poking around at the long side. And then if, you know, then if the market starts, you know, reinforcing what I'm looking at, I'll add to my positions. So my view is, you know, I get on a position, and then if the market starts going in the direction that I anticipate, I start build that position. And that's how you make a ton of money when, you know, ends up there or ends up there. All right, guys, thanks again. I will see you back tomorrow at 4:30 Eastern time. Sorry about the little hitch there. Stephen, thanks a lot for that that review, well, whatever you want to call it. So Al says, I've been chasing the indexes and getting smoked. Yeah, I mean, you can't short those things, man. You know, they're tough. And so I found it easier and more opportunistic to find these stocks like Baba and JD, but I will trade the indexes. You know, if I get a, you know, a good feeling about, you know, risk reward, I'll trade anything. It's all about understanding your risk, right? So understanding, and it's okay. You can form a hypothesis and say, okay, I'm gonna, get long here. I think that it's breaking out, get long here, and put your stop loss, somewhere there. And as long as you can form some kind of risk reward that makes sense, that if you're gonna, risk this much, for that kind of reward, then that's what it's all about. Understanding your risk, understanding where to get in, why you're getting in. And you're not getting in based on emotions. You're not getting in based on some blogger, something that you saw in some forum, something that Jerome Powell says. The market is always right. So to me, this is the news. Price is the news. And the market is the only thing that you need to look at. You should actually just take off the instrument, and whatever this chart is, it could be corn, crude oil, the euro versus the yen, whatever this thing is, you should be able to just objectively say, okay, this is what that's happening on the chart. Here are my risk reward parameters, and make a trade that way. And that's the only way to do it. All right, guys, I'll see you back tomorrow. Thanks a ton.
All right, Mark, tomorrow.